All right, so it's cooling off here in upstate New York, which means September is now here. And that means the official end of August and the official start to a brand new month. But how do things look seasonally during the month of September, especially after Labor Day? We're going to find out those answers and find some new opportunities as well. So stick around. You might just learn something. Hey, Optionetics Power Profit Trade members. Welcome to Tom's Trading Room, where we offer analysis, insight, and step-by-step comparisons of alternative investments other than just buying stocks. Do me a favor right now, hit that like button below as it helps support and grow the channel. Also on this side, if you click on the subscribe now button and ding the bell next to it, you will be notified as soon as a new video is uploaded. All right, so let's get started. Like I said, August is over, September is now here, we got Labor Day coming up soon. I want to do two things in this video. Number one, let's do a follow-up to a video we did 2 weeks ago where we found a Labor Day pattern. And number two, what happens after Labor Day? Now, to do that, you're going to have to follow me inside. And we're going to go in my podcasting room, jump on my computer so you can see exactly what I see as well as the opportunities that I see coming. Come on. All right, let's first jump into stocks, bonds, currencies, and commodities. You're looking at the S&P 500 chart. This is the S&P 500 ETF, or SPY, all the way back, and we just went back to May, just before Memorial Day weekend. You can see that the S&P was trading below 280, has really been on this higher high, higher low trend. What I mean by that is the highs keep getting higher, and the lows keep getting higher. That is what we see in an uptrend. A lot of movement up into last week. We're kind of steaming out here at around 350 though, but this is new highs. We talked about this in the last couple of weeks. We talked about the Labor Day pattern has just worked out brilliantly coming into this week, and I expect that the same thing's going to happen, although we might just slowly move sideways for the rest of the week. We shall see. One thing that I also have on here, this blue line. The blue line right now represents the 30 to 60 day at the money implied volatility. Now, if I just lost some of you, it just basically means options prices on SPY that are near the strike price, near the stock's price right now. And look how expensive they were back in June. They've fallen, all right, fallen quite a bit. In fact, over here, this is expressed as a percentage. So if you take a look, options prices have fallen from about 33% down to below 18. And now we're trading just around 19. Basically what that means is that these things have almost fallen in half. That means options premiums are half off where they were at the beginning of June. Bonds are recovering from a drop last week, but what's happening here is as the bond market is creating low, a lower high, and now a lower low, traders are getting out of bonds and they're getting into things like the stock market. Now, one area that we know that's been getting hit hard has been the U.S. dollar. UUP, which is the Power Shares U.S. Double Dollar Index, was trading above 27 as we were heading into Memorial Day. As we head into Labor Day, however, we're down here in the below 25 now. Fresh lows below 25. Traders are getting out of cash, and they're getting into things like stocks. You know what else they're getting into? They're getting into commodities as the U.S. oil market continues to rise. We talked about this in June. We talked about this at the end of July when we were trading in the 29 area. Look at where we are now. We're up trading around 31. So even more of a push higher. You see what I see here? I see same highs right around 31, and I see higher lows. This suggests that we could continue to get a pop in the oil markets. What's gold doing? Well, gold got really shaky this month as we started out April moving from around 180 to as high as 195, back down to 179, back up to almost 190, down to 179. Now we're climbing back up again, trading just south of 185, right? This seems to be the new norm for gold. Now, technically, this is putting in some really good support. We get down below 179, I think we could see a bit of a sell-off here. However, fundamentally, as the U.S. dollar continues to lose value, that's putting in some really good support here for gold and for other commodities. Finally, take a look at cryptocurrency, which all of you have been talking about lately. If you take a look at cryptocurrency, you can see here, there were a lot of buy and sells that we've seen, really good ones, by the way, in cryptocurrency. But the long-term investor sees support go from 9,000 to now up at 11,000. Support seems to be 11,000. We, in the last couple of days, have traded back up above 11.5. This is the resistance area just below 12.5. I see this going to 15,000 within the next couple months, possibly even as high as 20,000 if we have a horse race come November. All right, so let's move on to the money calendar. The money calendar is our seasonal trading strategy, and we have 10 years of at least 10 years of data, millions of data bits to come up with this information. This looks like a calendar. Each of these days offer opportunities of neither bullishness or bearishness that have happened 90% of the time in at least the past 10 years. Now, I'm looking at September 1st, and you can see, first of all, it does look like a calendar. Green means we have more bullishness than bearishness. Red means we have more bearishness than bullishness. Now, as we came out of August, the majority of August was on the green side. And we talked about holiday patterns and that Labor Day weekend was going to be green, and even after Labor Day weekend. And you can see here, this week, we've got nothing but green on the screen, mostly bullish patterns. After Labor Day, also mostly bullish patterns. But the leaves start to change after the 15th of September, and we start to see some browns, some yellows, and some reds, just like the leaves in upstate New York as they start falling off the trees after Labor Day. So too do some stocks start to fall into bearish patterns. Let me just show you two examples. We're going to take a look at the trades that are happening on September 1st. So I'm going to click in here, and you can see what I see is the symbols. I see green means it's a bullish opportunity based on patterns in the past. And then right here it shows me how long that pattern's supposed to last. In this case, Ulta Beauty, 21 days. All right, pattern starts on September 1st. Shows me the accuracy, the average profit, the end date for the pattern, the last time it actually had a loser, and then power meter. Now, I like to rank these by power meter because that positive power meter tells me that it did very well in its past. Now, I have Ulta Beauty, LMT, ISRG, NOC, etc. Notice they're all green. This is September 1st. If I scroll down, TLT is the first thing that I see that's bearish. Well, TLT moves against the stock market, so that sounds correct. And as I come on down, I start to see a little bit more bears, but very few bears in this entire day of September 1st. Now, let's take a look and look into this in a little more detail. If I click on Ulta, I see Ulta Beauty trade between September 1st and September 29th. All bullishness on the screen. Gives me the stats, 90% accurate. All right. Drawdown, what was the worst that it did? What was the best that it did? This is great. This shows me that I've got almost a 3-to-1 in terms of profit to drawdown. Look at what happened the last 10 years. All right. Profit, 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 profit. There's your only loser in the last 10 years. $8.69 down in the stock. The last 2 years have been considerably good. Now, if I want to click on the actual year, I can bring up and see how the stock performed during any one of those 10 years. This result for Ulta Beauty looks like a definite bull. Let's go back to the month. Take a look at the 16th. Click on the 16th. Let's go power meter twice, and you're going to see a change. Look at all this red mixed in with the green. So Lam Research is still at the top. It is a bullish trade. But you come down, you see Humana. I also see Children's Place, FFIV. These are all red trades. So if I were to look at, say, FFIV, all right, I can see a red opportunity that starts on September 16th and ends on October 16th. And again, all profitable. Not much here in the 2015, 16, 17. There's your loser back on 2011, only $3.90 down. But what I do is I go through and I scan these to find the best opportunities and then create that low-risk option trade from there. All right, so the money calendar is basically, like I said, telling me that we are seeing green into the next 2 weeks, and then things start to change as we head into what is one of only a few seasonally bearish times on the calendar. Mid-September to mid-October typically seasonally bearish as we head into Q3 earnings. Hey, be sure to tune in at the end of this week. I've got a great video for you. I'm doing a $25,000 payday challenge where I'm taking 5 stocks over the next 5 days. I'm doing 5 strategies with them to make $5,000 a piece. What stocks are they? What exactly am I doing? And most importantly, how did all of this end up? Well, come and join me on Friday. You'll get the answers to all of those. We'll see you then. Bye now.